Hello everyone, and welcome to this presentation of the correct way to trade support and resistance. Welcome once again. My name is Stephen Primo, the president and founder of Specialist Trading, and we are first and foremost an educational company where we try to empower you with all of the strategies as well as tips and techniques that I've accumulated in my 37 years of trading. Now today I'm going to empower you with a great technique for trading support and resistance, probably one of the most misunderstood, in my opinion, ways in which to trade virtually any market. But before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this particular technique for support and resistance, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. And I'd also like to mention that we are on Twitter, and I want to invite each and every one of you to follow us. That's our handle right there, at SPCLSTTRADG. We post a lot of great free information on a daily basis. I showed you a lot of ways in which to trade, specifically today's E-mini market, as well as the Forex markets. We give a lot of signals that we're currently in, as well as some daily wisdom for trading the market. So feel free to follow us on Twitter at SPCLSTTRADG. Now, as I started out this presentation by saying, we are first and foremost an educational company. And why do we say that? Well, I just have to give you a little back history for those of you who are new to my presentations. When I started out trading on the floor of the Pacific Stock Exchange, I was a specialist on the floor, hence the name Specialist Trading. I had a very difficult time. And the reason I had a difficult time, once my mentors explained everything to me, was because I was overcomplicating my trading. And the way I did that was I was following probably about anywhere from 15 to 20 indicators on my screen. I was virtually subscribing to every newsletter or trading magazine there was available. We didn't have trading rooms or chat rooms then, but we had newsletters, and I was listening to everyone, what they were saying, all these so-called gurus. I was also watching all the news, waiting for a news announcement to come. I couldn't make a decision until the news announcement came out, and I was listening to all the gurus on TV too, the same ones that were telling you what to do and what you should and should not do. So my trading was tremendously overcomplicated, and suffice to say, I couldn't make a dime. I would literally have about 4 or 5 great trades, and then the last trade I would give away everything that I just made. So I just treaded water for the first year and a half. And it was very discouraging because after all my hard work and all the things that I were taught were supposed to work for me, actually weren't working at all. And I was no closer to being successful than I was when I first started. So I didn't know how much longer I was going to be trading on the floor because I couldn't seem to make ends meet. Well, my mentors taught me that I was getting in my own way. And that's what I really feel, and that's what we try to teach all our students and members of Specialist Trading, is the reason why most people lose, in our opinion, it's been estimated upwards over 80%. It's not because they have a faulty strategy or because they have a faulty technique, mainly because you're getting in your own way by overcomplicating things and by relying on outside sources to tell you what to do. So what my mentors taught me, because I was in the exact same scenario, they said, Steve, your trading is too complicated. It's way too complicated. And they say something I'll never forget. They told me something. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. It doesn't matter if you've been trading 2 weeks, 2 years, or 20 years. Anyone can overcomplicate their trading. It's tremendously easy. But at the same time, it's the most difficult thing in the world to simplify your trading. Why? Because we don't want to strip away these conventional wisdom, these common techniques that we've been told will be successful. But if they're so successful, why aren't 80% of all traders making money? It's the opposite. So really, there is no consistency in what we've been taught. We're overcomplicating our trading. And the way to get onto that road to consistency, which is something I ultimately achieved through my mentors, is by stripping away all of these things for some reason we've been told work when they really don't, and just making your trading as simple as possible without overcomplicating it, without belonging to a number of chat rooms, without always relying on what some news report is going to be saying or what you should do until the news comes out, without having to worry about all these indicators you'll be following. Just keep it as simple as possible, and you'll get on that road to success. That's what we try to teach all of our students, and we try to give them all the tools, techniques, and the strategies that I currently use. And then we don't want you to rely on us for signals anymore. We want you to go on your own. There's no reason after months to be staying with us and relying on us for signals, because you should be able to do it on your own, okay? So here's what you're going to learn today. This is a class, as I said, we're like an educational company, so we want to teach you something at least every time we give one of these free presentations. I'm going to teach you, we're going to start off by talking about conventional trading of support and resistance. We're going to give you the conventional definition of what most people believe and how you should be trading it. And then we're going to show you how there's inconsistency in that conventional trading of support and resistance. Then I'll share with you, in my opinion, what the true definition of support and resistance is. So once we really understand what it is by simplifying it, by not overcomplicating and trying to make it more important than what it really is, we'll be able to see how to actually trade it. So I'll show you the correct way, in my opinion, to trade support and resistance. I'll show you an application which you can actually start using as early as tomorrow. But we get into some roadblocks with that. It's not always perfect. I'm not going to tell you that everything works 100% of the time. I know some educators do that, and they tell you that, no, this is a foolproof method, you'll never lose it. I would never tell people that. It's just common that you're going to be losing every once in a while. So rather than try and trade something that never loses, we'll just try to get the odds in our favor a little bit more, that's all. So I'll show you finally a way on how to increase your odds with this specific technique by just simply adding a very simple tool. Okay? Now before we begin, as I stated, this is an educational course. This is an educational class we're offering you. So I want to treat it as such. So if you happen to have a question, kindly wait till the end of today's presentation. I know a lot of webinars you may attend. It's kind of an ongoing interactive thing where you can ask a question whenever you like. I like to do things a little bit differently and save the last 10, 15 minutes for any questions. So the presentation will move a lot smoother, and oftentimes if you just simply wait for the next slide, your question will be answered. So if you have a question, just try to remember it, and we'll get to it at the very end. Okay, so I won't even be taking any questions while the presentation is going on. Oh, okay. I'll just answer one question. I'm sorry. The most common question is this being recorded? Yes, it is. So if you have to leave early, or say you just joined the room a little bit late and missed the first 2 minutes of this, don't worry. This is being recorded, and you can see, I believe, in your right in your chat box, there's our information on how you can contact us. If not, I will be giving you the information at the very end of today's presentation on how to get us, reach us, or get a link to this presentation. Okay, so any questions, just wait for the end. So let's start off, okay? I want to begin by first talking about conventional trading of support and resistance. This is the way we've been taught. This is the way the majority of people trade support and resistance, or some faction of it. This is basically the way in which to look at support and resistance. Here's the standard definition. Support and resistance is a concept in technical analysis that states the movement of the price of a security. Now, it doesn't have to be a stock. It can be a future. It can be a contract, currency pair. But the movement of the price of whatever we're trading will tend to stop and reverse at certain predetermined price levels. So we're going to, in other words, come to these predetermined levels and stop and reverse. All right. Now, this is basically what you're looking for. Here's an older chart of Apple, and I'm going to start out showing you some older charts. These are just for educational purposes. Then we'll show you some charts later on in the presentation, which are as current as today's action. But here's an older chart of Apple. Now, someone would looking at this, reading all the books or attending the courses on support and resistance would say, okay, well, we see here that this is a complex bottom. This is support. We've hit this 1, 2, 3 times, so this is where price has come to a certain predetermined level, and we should stop. And that's what it does, okay? Works perfectly, right? And it works also in the futures markets as well. Someone looking at this will say, well, we've come up here. This is obviously resistance. We can't get through that. We should not be able to get through that resistance, and I want to sell or go short the E-mini, and look what happens. It works perfectly, right? Only trouble is there's no consistency in this. In other words, it works until it stops working, because this is what usually happens. You'll see an example like this. You'll apply all the rules. You'll say, boy, this works perfectly. It's come to a certain level, Fibonacci level, or some type of retracement. We have support here. This is where the chat room says you have to buy this. It's going to hold, and look what happens. Okay? And you'll see this in all time frames, all directions. Here's a 60-minute chart of IBM, all right? Someone would look at this and say, well, it's gone up all the way from 182 all the way up to 188, 6 points. We have resistance here. This is where it should stop. This is where we were talking about in the chat room where IBM should hold, so I'm going to short it, and look what happens there, all right? Once again, this is a 60-minute time frame, but we can also go back to a different market. Here's the euro dollar. Someone looking at this, once again, would say, well, this is a complex bottom here. We've been coming lower and lower. The news came out about the economic conditions, about what's going on in Europe. So this is a good place for it to hold. We've made some type of a double bottom. So I'm calling for support as well as all the people in my trading room. And look what happens, okay? Once again, there's no consistency in this type of trading. You'll see it work from time to time. And there are some people, some educators that make very good money trading this way, but it's very difficult because it's subjective. It's not cut and dry. There's no real way to know that things are going to hold at these predetermined levels. All right, so how do we trade support and resistance? Well, at Specialist Trading, this is, in our opinion, the true definition and application of support and resistance. Remember, I started out the presentation talking about how my mentors taught me to keep things as simple as possible. All right? Well, so how do we define support? Well, support is just when price comes to a certain point and there are more buyers than sellers. That's it. We don't have to get in all this technical jargon or all these double bottoms or all this volume talk or all these Fibonacci levels. It comes to a certain point where there happen to be more buyers than sellers. That's what support is. It's no more complicated than that. More buyers than sellers. And conversely, resistance is just when price comes to a certain point where there are more sellers than buyers. It's not complicated. There's no reason to overcomplicate things. I think the reason why we do that is because we tend to think that it makes things more valid if we overcomplicate our trading plan by giving it all these different terms and names. It's been my experience in my 37 years that it's exactly the opposite. The simpler things seem to have the more consistency rather than the more complicated names and jargon we give stuff. So if we're just looking at when there are more buyers than sellers, or conversely more sellers than buyers, what's the correct application? Then are we going to wait to buy? The conventional wisdom says, well, you want to buy where there's more buyers and you want to sell where there's more sellers, right? Not really. We are going to sell support and we're going to buy resistance. We're going to do the opposite. All right, so how does that work? Here's what we're going to be looking for. This is our basic pattern. A lot of people say this is a pivot low. A lot of people say this is some type of short-term pivot. All this is there's more buyers than sellers. In other words, price was coming lower on this bar. It went even lower, but met buyers at this level, and then started to go back up. All right? This is what we call support. More buyers than sellers at this point because it stopped going lower. At this point, if price comes right back down, we are going to sell. We're going to sell once we break below this so-called support level. In other words, we're going against it. We're betting against conventional wisdom's idea of support. Conversely, if we have resistance, remember, what is resistance? It just means that at some point there were more sellers than buyers. That's it. It does not have to be complicated. Price was going higher here on this bar. It went a little bit higher, then stopped. And then on this bar, it couldn't go as high as the previous and then went lower. So there were more sellers than buyers at this point. That's what stopped the rally. That's what stopped the bounce. If on the next bar or any bar, it doesn't really matter when, but if we come back through that level, we are going to buy. We're going to buy resistance. And that's it. We're not in any way trying to say, well, since they stopped there, that is a good sign telling me that most likely they're going to stop there again and I should be selling. Not necessarily. There's no consistency in that. There's no proof that we are going to hold there. There's no proof that we're going to hold there at all. Conversely, same thing when you have support, there is no proof that we're going to hold on the bottom and you should be buying. So we want to just see that we get to these so-called support and resistance levels, and once they break, well, then we're going to just either sell the support or buy the resistance. Let me show you an example here. If you think that's too simple and you just can't fathom that and you think, well, this goes against everything I've been taught. I've been taught we're supposed to look at complex tops like this. And this example we showed you earlier, this is the IBM example. And this is what support is. I mean, it should say resistance. This is when you hit some type of a top, the volume probably changes, and then you hit the top again, you can't get through. That's what I should be looking for, not that simple 3-bar pattern. It all depends on what time frame you're looking at, all right? because if we look at the same time frame of IBM and we go up a notch on a daily bar, here's the exact same scenario. And you see how we just changed the time frame and now we have that 3-bar pattern again. A high, a higher high, a lower high. The sellers came in right here. There were more sellers than buyers. So if you feel more comfortable looking at this, it is no different than this. It's just we're looking at a different time frame. But this is the only thing we want to be looking at because that other scenario is too complicated. In other words, here's a chart of the euro dollar, a daily chart, and right here this is where someone would say, well, this is the way I was taught. We should be looking for scenarios like this. This is a complex double bottom. Probably some news came out right here, and this is what makes me feel comfortable that there's support. There's a lot of action going on. Well, at the same time, it can be very subjective. A lot of people can get different, points of view. There's a lot going on here. A lot of people can say, well, we're just in a rangy market. I don't really know if this is support or not. So it's too cluttered, and at the same time, we're overcomplicating our trading. We look at the same chart, but now we go up to a weekly level. Here's the same scenario. You see how simple this is. The exact same area of the time frame where we had a low followed by a lower low and then a higher low. This is that 3-bar pattern again. So look for this. It's a lot simpler, less complicated, and you don't have to once again overcomplicate your trading. You're just looking for that. It's no different. If you're looking at a 5-minute bar, it's no different. I'm going to show you a lot of examples. All right, so let's start out by looking at some current stock examples. You may go back a couple of months. These may go back in the last couple of days. Here's AA Alcoa. As we see here that we've been going higher, let's look for the so-called support and resistance. Those are the tops that we have like a high, a higher high, a lower high, and here are the bottoms, all right? So when price goes above, we want to buy, and when price goes below, we want to sell. Well, look how simple that is, all right? We never went below that 3-bar pattern where it created a pivot low, so we never got short, and all we did was buy all the way up. How about SLV? That's the ETF of silver. As you can see here, it's been going down, but there have been some different support and so-called support and resistance levels. Everything in red is the so-called support, and that just means that's where the buyers came in. There were more buyers than sellers. And at this point, the green line here is telling you where there were more sellers than buyers. We want to sell when we go below the red line. We want to buy when we go above the green. But as you can see, it just continued to go lower and lower. So all you did was sell. See how simple this is? There's nothing you have to do to overcomplicate this type of trading. How about FAST, all right? Sometimes it tremendously works in your favor. As we can see here, we have the so-called support, and we have the so-called resistance, okay? We want to buy when it gets above these green bars. We want to sell when it gets below. Well, it never went above the green, and look at all the areas we could have sold. It broke that so-called support of the little triple bar action there. And look at the nice movement you had down. We never went above the so-called resistance levels, and we just continue to go lower and lower. How about the E-mini? All right, here's a 5-minute chart going back a couple of weeks on August 20th. This 5 minutes, the same concept applies. We're looking at the same type of 3-bar action for so-called support and resistance. If we trade at the green bar, that's where we want to buy because we're breaking through the so-called resistance. If we trade at the red bar, we're going to be selling. Well, we just continue to go higher and higher, and look at this nice day you could have had in the E-mini on a 5-minute time frame, just simply trading this so-called support and resistance. How about a 2500 tick bar chart? Okay, this was last week. The market went lower, but we still define the so-called support and resistance on this tick chart. And once that support was broken, we just went short. We never traded at that so-called resistance where the green bars were. And you're going to see the same concept work in the currency pairs. Here's the daily chart of the Canadian dollar. Here are the so-called support and resistance. Remember, the so-called resistance is just a high followed by a higher high by a lower high. And the support is just a low followed by a lower low and then a higher low. That's it. All this means is at this point there were more sellers than buyers, so then price went lower. All this means at this point there were more buyers than sellers, and so price went higher. That's all this means. Does in no way mean that price will hold there. There's no promise, there's no consistency telling us. So all we want to do is just wait to see that they're violated and then exploit them and just simply buy or sell. Now in this case, we never went below on the Canadian dollar, so you just simply kept buying. Now, I know what you're all saying. Well, sure, these are great scenarios. It doesn't always work that way. You're right, it doesn't. In fact, look at this example in Oracle, okay? This is a couple months old in Oracle. As we're looking here, we want to, trade this type of technique of buying resistance and selling support. Right off the bat, we have the so-called resistance here where you would have gone long because you traded above these so-called resistance levels. But nothing really happened. Like those other charts, we didn't go straight up. We kind of still went sideways. So we have to look where those support levels are right here. So you would have had a loss and got stopped out and gone short at these once these so-called support levels were broken. Well, you're short now, and guess what? It goes higher. So you cover, and then you say, well, now it's going to break out. So you go long here at the breakouts on the so-called resistance. It goes up a little and goes back down, and you're starting to get worried. But finally, it starts to go up, but it's kind of an anemic bounce. And so you're starting to wonder, well, boy, should I buy more? You have another breakout here above so-called resistance. But it really doesn't. In fact, you're not making any money. In fact, you're actually losing. And guess what happens? This is where you will be stopped out because this is where the so-called support is. And then look what happened down here. We gapped even lower. So you would have sold and bitten out. After all these trades, I believe there was not one winning trade. Why? Because you had a choppy, rangy market. And that will happen. That's what I said in the beginning of this presentation, where nothing is 100% guaranteed. There's no way to say you'll never have a loser. There's no way to say that everything works all the time. It's just not the way things are. But rather than try and tell people that this is a foolproof technique that generates thousands of percent every month, all we try to do is kick up the odds in our favor. That's the only thing we can do. So at least, we can sidestep some of these losses and put the odds a little bit more in our favor. So how do we increase our trading odds in every market? Simply by only buying resistance in an uptrend. So in other words, we can only buy once we break above the so-called resistance where there are more sellers than buyers if the market is going higher. That way we have the wind at our sail. We're swimming in tune with the current of the stream. We're not swimming upstream. And conversely, we're only going to sell support in a downtrend. So when the market is going lower, we're only going to be looking to sell. So we're not going to be in any way trying to do both things at the same time. If we're going up higher, we're only going to be looking to buy. If we're going lower, we're only looking to sell. Here's the only problem with this. Now we get into another problem. How do we know if we're in a trend? That's the difficulty. Everyone knows you should trade with a trend. It's the first thing you learn. It's Trading 101. If it's so simple, why does everyone have a different idea of what the trend is? Everyone wonders, well, I thought we were in an uptrend. Well, another trader would say, no, I'm trading the same thing. We're in a downtrend. And another trader would be looking at the same chart and say, no, we're not even in a trend at all. We're just in a flat range. So it all depends on how you perceive trend. At trading, at specialist trading, we feel we have probably one of the best ways in which to determine what trend is. And that's our proprietary tool, the PET-D. So let me show you how you would trade support and resistance with the PET-D. You see, the PET-D is a color bar algorithm. If all the bars are green, we're in an uptrend. That's how simple it is. And conversely, if all the bars are red, we're in a downtrend. So now we know how to trade. Now we know which direction to be applying this technique for support and resistance. So here's what we're going to be looking for. For a buy pattern, we want to look for price to trade above an all green pivot high. That's that 3-bar pattern. And we're going to buy when price trades 1 tick or 1 pip, depending on what market we're trading, above that resistance. That's how simple it is. So before, we were looking at this, and we just said, okay, well, we had more sellers than buyers come in here. And then when we went above, we're going to be buying. But now, once we apply the PET-D, we have to see things look like this. We have to have all the bars green. Why? Because it's telling us we're in an uptrend. And most likely when you're in an uptrend, you're going to be going higher. So this so-called resistance is going to be broken, and we're going to jump on board. Now, when we're going short, well, we're going to look for price to trade below an all red pivot low, that 3-bar pattern. and we're going to sell when price trades one tick or one pip below the so-called support. So before, we were looking for this pattern, all right? We had all the buyers come in here. At this point, there were more buyers than sellers, and we sold. But now we're not going to simply do that. We have to apply the PET D, and all of the bars need to be red. Why? Because if all three bars are red, they are telling us we are now in a downtrend. So this gives us the confidence to know that once we break below the so-called support level, we can sell. But we need that confidence to know that we're in sync with the trend, or else we're going to trade a lot like that Oracle example. We're going to go back and forth. We're going to get whipsawed. So once we have the PET D color tool, we know if we should be going long or if we should be going short. All right, so let's look at some stock examples. Here's Urban going into the first week of September. All the bars are colored green. So what does this tell us? It tells us that we are going to play against the so-called resistance, because if the bars are green, we're most likely going higher. And most likely, the conventional wisdom is telling us, well, there should be resistance right here. Look, we made a nice top. Well, no, we don't look at it that way. We look at it as if all these bars are green and they continue to be green, once we break above, we're going to be buying. We don't care about looking at that as some place to sell. We want to buy. Why? Because we're in sync with the PET D. So if we look at all the so-called places where there were more sellers than buyers, they're right here, okay? And once those areas are broken, look at all the points you had to simply go long Urban, okay? How about SWAN, SWN? All right, we see here that at the beginning of this chart, the bars were green, but then we switched over to red. Once we have anywhere from 2 to 5 bars in a specific color, that's what the PET D is signaling what the trend is. So we roughly had 3 bars right here telling us, well, we're now most likely in a short-term downtrend. So all we want to do now is take advantage of conventional wisdom's idea of support. Some people would say, well, this has come down way too much. Here's support probably right here. We seem to be stopping. We got more buyers than sellers right here. It looks like we're having a bounce. As long as these bars are red, the PET D is telling us we're most likely going lower. So we want to take advantage of the so-called support areas, as we see here marked with the red horizontal line. And every time one of these so-called support areas is broken, that's where we're going to sell. Once again, do you see how easy this is? We're not in any way trying to pick tops and bottoms. We're not listening to any news. We're not figuring out Fibonacci numbers, which can work, but they're very difficult to discern what the correct level is. We're not looking at volume. We're not looking at so-called support and resistance. We're just looking at the trend. The PET D is telling us what the trend is, and we're looking for these 3-bar pattern here to exploit. That's it. It doesn't get much simpler than that. How about the IWM? That's the ETF for the Russell 2000 index. We see going back here from June all the way to the first week in September. As we rallied here from the middle of summer all the way up to the first or second week of July, we were in green. But then look what happened. All the bars turned red. So we're in a downtrend. And just about a month or so ago, 3 weeks ago, we started to have a confluence of green again. So how can we take advantage of this time period going back on daily bars back to June, beginning of June roughly? Well, remember, once the bars are green, we'll only look to go long, and we'll look to exploit these so-called resistance areas. Once the bars are red, we'll only look to go short, and we'll exploit these so-called support areas, and so on. So we define what they are and simply jump on board. Okay? I know what a lot of you are saying. You're going like, boy, because as I stated, to hold your questions off for the end, and I know most people are probably thinking this right now, or being ready to ask this. What we are sharing with you today is an entry technique. All right, I know a lot of you are saying, well, Steve, where do I place my stop? Well, where do I get out? You know, some of these things turn real quickly, and so I got to get in and out very quickly. This is all explained later on in the course. What I'm sharing with you today is just an entry technique for exploiting this so-called support and resistance. All right, let's look at some E-mini charts here. This works tremendously well on the E-mini because with E-mini traders, they usually like to trade intraday bars. And you'll see a lot more of these signals. In other words, if you're looking at daily or weekly bars, you're going to get less signals because of the time frame. But if you go down to a smaller time frame, you'll see a lot more of these small little sub-trends happening within the day, and you'll see a lot more opportunities to either exploit support or exploit resistance. Here's a 30-minute chart of the E-mini just a couple of weeks ago. As you can see, all the bars were green here, so the E-mini was going up. So all we wanted to do was exploit the so-called support level. Someone could look at this and say, well, we've kind of topped out here. We had a nice gap opening. We've kind of can't get through this level, so this should be sold. And look what would have happened. You would have literally lost everything because the market kept going higher, gapped higher, and went higher. Remember, there's no consistency in conventional ways of trading support and resistance. They'll work until they stop working. It's much better to jump on board the train than to try and stand in front of it and think and assume it's going to stop. It's much easier, and you'll be trading a lot longer if you just jump on board the direction of the train. So the PET D is telling us the train is going higher. We're going much higher, so just wait for those so-called resistance points to be broken. Do you see how simple this would have been? This is the last 2 weeks on a 30-minute chart. Now, obviously, you would have had to hold your position overnight. We know some traders don't like to hold positions, so you can go to a smaller intraday time frame. Here's a 2,500 tick bar chart of the E-mini. This was last week. Bars were red, so we're only looking to go short. Bars turned green later on in the morning, so we're only looking to go long. And look at all the areas you could have exploited the so-called support and resistance. Now, looking at that same time frame, I want to show you what happened today. All right, today was a great example of how you could have used this technique. It was so simple. As early as, I believe, 8 o'clock Pacific time, we got an early warning from the PET D. We had 3 consecutive closes turning red, telling us, well, most likely we're in a short-term downtrend. So you would have known right off the bat that at this point right here, we changed from green to red on this tick bar, that you should be looking to go short. You're not in any way going to buy. A lot of people got hurt today trying to pick a low on the market. Remember, picking a low on the market is just a recipe for disaster. It'll work every once in a while. Trust me, take it from someone who's been there. But when it doesn't work, you give everything back. So you don't want to be trading that way. That's a gambling mentality. That's not a professional trader mentality. So what we want to do is be in sync with the market. And at this point right here, I believe about 8:20 this morning Pacific time, we got a confirmation from the PET D telling us that we're most likely going lower. So if we're going lower, we want to look for all these so-called places where buyers came in. There were more buyers than sellers. And we're going to wait to exploit those areas. And look at how we could have gotten short today. Would have been that simple. Once again, I know a lot of you are saying, but where do I place my stop? Where do I exit? We'll get to that later, okay? Same thing with the Forex markets. We look at this daily chart of the dollar-yen. All the bars are green, so this means the dollar-yen will most likely go higher. This was, I believe, this chart was taken up until today or yesterday. So we're only looking to go long the dollar-yen, and we've only had 3 chances to go long, but that's still very nice. We could have made roughly about 300 or 400 pips on this. Now, if you really want to see a lot of nice signals, let's look at the euro-dollar. I don't care what the news is or what the reason is why the euro-dollar should be going lower. Everything I need to know, I'm being told by the PET D weeks ago, okay? The euro-dollar has been heading lower and lower. There's probably some news that can justify it. We really don't care. It's very similar. This is the same thing that my mentors taught me on the floor. They said, Steve, there's no reason to listen to news because that's comparable to walking down the street and you're standing at the street light and it starts pouring rain and you're getting wet, you're getting drenched. And the person next to you tells you, hey, did you know you're getting wet? Did you know it's raining? You don't need to be told that. You can see it. You can feel it. Your clothes are totally wet. What you need to do is react off of that. You don't need to be told what's happening. It's the same thing with news. We don't need to be told what some news event is, or that's only for investing. But if you're trading, you can see it in front of you, and especially if you're a member of our PET D course, because you see the bars are red. They've been red for weeks. So why would you even consider listening to news? If it's red, the only thing you need to know is that, well, where am I going to be selling? You're going to be selling once this support is broken. Okay? And look at all the places you could have gotten short. This was taken as, I believe, today, this chart. All right, so let's recap here before we go into the question and answer. We went over conventional trading of support and resistance. We saw how what most people look for is price to get to a certain level, and then that's where you want to take advantage that it's going to reverse. But we know through consistency that it doesn't work. It says there's no consistency to it. There are some traders that are able to trade this and they make a nice living. But remember, we're an educational company. I said that in the very opening of this presentation. As being an educational company, we have to be able to teach you how to do this. It's very difficult to teach that because there's a lot of subjectivity or discretion involved. These guys who are able to trade support and resistance have an inner chart or a certain way in which to do it. But we want to be able to trade and teach the masses the same thing so that two people will look at the same chart and come up with the exact same scenario. We don't want two people coming to the same chart and saying, well, that's support. And then the other person looking at the exact same chart saying, no, no, that's resistance. But that's what happens much of the time. So there's no consistency in conventional trading of support and resistance. The true definition of support and resistance, in our opinion, is just simply price comes to a point where there are more buyers than sellers. That's support. And resistance is price comes to a point where there's more sellers than buyers. That's it. And what we want to do is exploit those certain levels. All right. Now we showed you the correct way to trade it. That's by exploiting this. Once the resistance is broken, we want to buy resistance and we want to sell support. But we saw that oftentimes in a rangy or whipsawing market that will lead us into trouble. We'll get whipsawed a lot. We'll get stopped out, and it won't really help a lot. So we showed you how to increase your odds by adding the pet D. That's really how you're going to get in sync with the trend, because you only want to buy resistance in an uptrend. You only want to sell support in a downtrend. And the best way to find out what the trend is by simply applying the pet D. Now, here are points to remember. What I shared with you today is not a complete strategy. Once again, I know the main question I'm going to be getting at the end here is where do I exit or where do I place my stop? All right? Stop placement is extremely important in any strategy or trading plan. Also, advanced entry signals. What about if we want to use an advanced entry signals to give us more bang for our buck, or an advanced exit signal? How about money management? You need to know all of these things in order to trade a strategy with some type of consistency, because these are all very important pieces of the puzzle. We only share with you a very simple entry technique. All right? Here's what we're offering you today, though. We're offering you a special combo that we've had tremendous success with. We've had nothing but positive feedback from the majority of our people who are involved in this combo course, where we give you a full-fledged strategy for trading that has remarkable consistency, works in every market, in any time frame, in any direction. As well, we include the pet D. All right, this is our 2-for-1 attendee special that we've been running as of late because we've had so much success, and the majority of our customers and students are extremely happy with it. Let me just show you another way in which to apply this. These are actual signals of strategy number 4, what we're offering with the pet D combo. All right, as you see here in Amgen, these were signals going into the first week of August to go long. Now, each one of these was a buy signal, as you see, but only 2 would have worked out. This one would have worked out, and this one. But as you can see, this one was, not very strong in its buy signal, and then you probably would have gotten stopped out. So how could we have ramped or increased our odds for success applying the pet D to strategy number 4? Well, we just simply apply the pet D, and we see that when we get a buy signal, we want the color of the buy setup bar to be colored green. That means that the trend has changed and that the pet D is confirming. If we get a buy signal, all the bars need to be green. All right, so here's our arrow that comes with the automatic add-on that tells you you have a buy signal, and it was green, and you saw this worked out. Here's another buy signal. It was green, and you saw this worked out. But on this particular buy signal, it was red, so you would have bypassed this trade, and you would have missed this losing trade altogether. How about HAS? Here's a 2 signals to go short using HAS. Okay. Now, as you can see, the first signal would not have worked out. You would have gotten short and been stopped out most likely. The second signal would have worked out fantastically. All right. But how could we have increased our odds for success? Well, we simply want to add the pet D, and if we get a sell signal, which we have here, the automatic bar, I should say the automatic arrow appears, that bar underneath the arrow should be red now. So any sell signal has to be highlighted red. Well, as you see, this signal that worked out tremendously was red, so that's why you would have taken it. But the previous signal was green, so you never would have taken this and bypassed the signal altogether, thereby increasing your odds for success. This is a totally different way in which to use the pet D. That's how many advantages there are to this. Another way to use it is as a market timing tool. Here's the chart of the industrial index, and these are strategy 4 signals that were all applied to the industrial average. A lot of people like to apply strategy 4 to tell them when to be long in the market, so they can actually, they don't have to buy the ETF, or they don't have to buy a contract on the future. They can just simply say, well, now I have the confidence, since we have a buy signal in the Dow, I can go long a particular stock or buy an option. All right, and all these signals worked out. Why? Because the setup bar was colored green. But look at this signal. This final signal here coming into August was colored red. So you wouldn't have taken this, and most likely you would have said, well, this is an early warning signal that most likely we may be topping out. And look what happened after that. That's a very large sell-off that occurred in the beginning of August. And then lastly, we can use the PET-D long-term. Look at how it can see this index chart of the S&P 500 going back on a monthly time frame, going back 20 years. And if we just apply the PET-D, look how it signals when we should be in the market long-term and when we should be out. That's how valuable this tool is. So we're offering both of these things in a combo. The strategy number 4, which is a great strategy in and of itself because it has remarkable consistency. It trades any direction, any time frame. You can trade it intraday. You can trade it on currency pairs. You can trade it for stocks. And the PET-D, where the PET-D you can apply that type of support and resistance application I shared with you today, or you can use it to confirm strategy 4 or any strategy you may have at all. There are a number of ways in which to use this. Now, if we sold these separately with all the things you see here included, the instant course access, the entries, exits, and stops, the signal alerts, the add-ons that automatically color the bars and give you the buy and sell arrows, as well as my email address, both of these things on our course sites would roughly cost close to $2,000. All right. Once again, we're extending our offer down to $14.95. We cut it by 25%, and we are extending the payment plans. So what a number of people do is they put down a small deposit, and they continue to pay some type of payment plan that's put together with the trading consultants. Remember, this is for a limited time only, but you saw how well the PET-D helped us today trading the support and resistance. You've seen how it can confirm strategy number 4 trades, as well as you've seen some great strategy number 4 trades just by themselves. So this is a great combo to use. We've had the majority of the people who have signed up for this combo deal are very happy with it and successful. So we're offering this once again before we end this offer, probably in the next month or two, where we go on to something else. Now, if you're interested and you want more information or you want to quickly sign up for this, you can go to protraderstrategies.com. That's our sister site. That's where they promote and market all of my individual strategies and courses. And you can email one of their trading consultants at trading@protraderstrategies.com or call one of the consultants and sign up for a payment plan at area code 310-598-6677. Okay, I want to thank you so much. We'll reserve the last 10 or 15 minutes for questions. I want to thank you so much for waiting. I know a lot of you had questions. Once again, I'll try and get to them in the order they were presented. As I see here, Bob is asking, where would you place your stop on these trades entries? Once again, Bob, this is all in the course. We offer you a number of different ways in which to place your stops and where to place your exits. Also, we give you a number of different ways on where to enter as well. But this is all in the course. I can't really give that information away because the many people that have subscribed to this and have purchased our 2-for-1 combo wouldn't be too happy if I was literally giving away all the rules. Because someone I know is going to be asking me, where do I exit as well? So the main thing is this works tremendously with the PET-D because the PET-D is probably the best tool I know for a short-term trend. As we stated, I think I showed you that slide. How do we ramp up? Well, we ramp up this support and resistance technique where we're only going to buy resistance when we're trending higher. We're only going to sell support when we're trending lower. The only problem is everyone has a different idea of what the trend should be. I talk to so many students where they say, boy, Steve, I was always taught that the trend has to be we look at a higher time frame to discern what the lower time frame should be. And someone else would say, well, Steve, I was always taught with these two indicators. When they cross, that tells me the trend, and when they go back, that tells me the opposite trend. Everyone has a different idea of what trend is, and for some reason, they're not consistent. So that's why we say the PET-D is great for short-term trend. Well, we also have an overall trend tool we use, but for short-term trend, such as trading these techniques, the PET-D works fantastic, okay? Let's see, Carl says, works only during trending markets. That's exactly what I said, yes. What are consolidations area? In other words, getting whipsawed. Well, Carl, that's what I was just explaining. When you have this PET-D, this will keep you out because you'll be bouncing back and forth between red and green, and therefore there will be no established trend. So that's the beauty of the PET-D. Once again, it keeps you out of these whipsaw markets. All right, and when a nice trend is established, you'll have anywhere from 2 to 5 bars of a specific color telling you which direction you should be in. But when you have a consolidation going back and forth, you bounce from 2 bars here to 3 bars here to 2, and there's no consistency, so it pretty much keeps you out of trading those choppy markets. Okay? Carl asked once again, where do you place your stop loss? Carl, I think we just answered that. That wouldn't be fair to the people that did purchase this. Harry says, volume is lower, other webinar. Oh, I think Harry was having trouble with the volume. I hope you were able to listen to that, Harry. Once again, if you have trouble or weren't able to hear this, or the sound, or maybe the picture wasn't that good, the information below, you can request a link to the recording and you will be able to see this again. But remember, even if you do request a link, this limited offer is only going to be for a while, so I would take advantage of that if you could. And we realize that not everyone can come up with that sum in one payment, so that's why we put together these payment plans. Everyone has one that has been put together to meet their needs. So talk to any one of the consultants and they can devise a trading plan that meets your needs, that you can meet and match, and you can be up and running as soon as tomorrow if you'd like. Let's see, Lori is asking, my question when you're ready, if this is a course, how do we get the PET-D color code from our tick charts? Okay, well, we give you the PET-D. In other words, we give you the add-on. So that's why I stated in the course, this comes with the automatic add-on. The add-on is just something that you upload onto your charting software. Now, with the PET-D works, I know a lot of people say, well, what software does it work with? It works with the 4 major softwares. It works with NinjaTrader, TradeStation, MT4, and Metastar. So if you have any of those charting platforms, we send you the code. You simply upload it, and it works like a tool, an indicator. Anytime you want to apply the PET-D, you simply turn it on, and you'll see all the colors turn either red or green. And it does not change. In other words, once a bar is closed, it's not going to go back and change that to meet certain qualifications. Once the bar closes, that's it. It does not go back and re-optimize. The only thing, when the bar is still open, let's say you're looking at a 5-minute bar, while that bar is still has not completed and ended its 5 minutes, it can change from red to green back and forth depending on where it is with the proprietary settings. But once again, once it closes, if it closes at green, it stays green. It will never change going back and re-optimize itself. So that's the way it works. It's not going to change. We're not going to alter the actual settings of it. It's a proprietary trading plan that I was introduced to on the floor some 25, 30 years ago on the floor. But we had to calculate it by hand. It was very difficult. It wasn't a very complicated algorithm, but it was something you had to do by hand. You could only use for daily charts. But now that we have high-speed computers and programmers, we're able to apply it for intraday charts, for tick charts, anything you'd like. It also can work. We tell you how you can apply it if you'd like to look at candlesticks. A lot of people say, well, Steve, I look at candlesticks. It won't work with this. Yes, it does. I look at candlesticks all day long, and I have the PET-D with my candlesticks. So it works, and we show you how you can do that. Okay? Patrick asks, what about using the 50-period simple moving average? Well, Patrick, the 50-period simple moving average is the overall trend. All right? That's the overall trend. The PET-D is the short-term trend. So this is the beauty of it. So if you know, a lot of our traders like to say, well, I'm only going to use the PET-D if it's in sync with the overall trend. That's fine. Okay, there's nothing wrong with that. We don't tell you you have to. But in other words, if price is above the 50 period, we say to our students that the overall trend is up. And if price is below the 50 period, the overall trend is down. So therefore, let's say price is below the way it was today. At some point, let's say you're looking at a 30-minute chart and price went below the 50 periods of moving average. Well, you have to wait for that short term to be red, to be in sync with the overall. And a lot of people will trade that way. Other people will just say, you know what, I'm not looking at the overall trend because I'm an intraday trader. I'm just going to look at the short-term trend. That's fine too. There's nothing wrong with either one. It just depends on what type of a trader you are. Okay? Let's see, next question. Which time frame has more accurate to use the PET D? Can we use it lower time frame, like 3 and 5 minute bars? Yeah, you can use it on any. I've used it on 500 tick charts. I showed you an example today with 2500 tick. I showed you a 5-minute chart today. Any time frame. There's no one time frame that works the best. I get this question all the time. People want to know, what is the perfect time frame to use? And I'll trade that. That's not the way trading is. It's what you bring to that time frame. In other words, it's what your discipline is. If you look at all the archived videos and all the other things I explain in the course, if you know how to use that mix and match, that's what the perfect time frame is. We give you a lot of ways to up your odds for success. If you apply those, it doesn't matter what time frame you're looking at. So does it work in small time frames? Yes, you're going to get a lot of signals in that. Does it work in a monthly chart? Yeah, I showed you some examples of that. So it really doesn't matter. All I can say is it works in any time frame, but what matters is how you apply it. That's the main thing, and we teach you this in the course. Stephen asks, hi Stephen, it says, how does the 50-period simple moving average relate to what you were saying concerning support and resistance, uptrend and downtrend? Well, once again, we don't really use this a lot in this particular technique. You can use it if you'd like it. In other words, a lot of people will say, well, if price is above the 50, that means the overall trend is up. So that means if the overall trend is up, I would only want to buy if we're going higher. Why? Because the overall trend is up. And if price is below the 50, well, the overall trend is down. That means I would only look to sell support. Okay? You can do that. Or you can say, I'm only going to be looking at the PET D, and I won't care about where we are in relation to the 50. It's really up to you. There's no right or wrong. It all depends on what type of trader you are. So it's up to you. If you want to, give yourself a little bit more odds in your favor, but you'll get less signals, you can apply the 50. If you don't care about having less signals, you want more signals, well then just use the PET D. That's the beauty of it. Let's see, let's go down some more questions here. Jerry Girl is asking, does the signal buy or sell automatically show up on the charts, or do you have to manually put it in yourself? No, well, that's the add-on we get for strategy 4. Remember, the PET D is not a strategy. It's a short-term trend identifier. It's just a color bar tool that colors red and green all the time. Where you will get setup signals is with strategy number 4, as we showed you in those Amgen examples, and I believe HAS as well. You'll get some nice signals, and a little arrow will appear for those. So that's where it's great to use the PET D to confirm those. So once you see a little arrow appear, if it's a buy arrow, you want to have the PET D turn green because it automatically will give you a higher level of consistency. If it's a sell, you want to see the bar turn red. And there are also a number of other things you can apply, which we teach in the course as well. Okay. It says, I use a CAN platform, so is it usable? I'm not sure what you mean by a CAN platform. Also, can you use this with FX MetaTrader 4? Yes, you can. I believe it works with MetaTrader 4, yeah. But for more clarification on using it for MetaTrader, just send an email or ask one of the trading consultants, and they can tell you exactly. But I'm almost certain that it trades for FX MetaTrader 4. As you see here, this is a very common question. Dana is asking, does this work with Thinkorswim? And Dana, the way this works is as you see here, one of the trading consultants answered this is, yes, you can use your Thinkorswim data feed to run the PET D on the free NinjaTrader download. In other words, they offer you a free NinjaTrader download, so you simply use NinjaTrader for free. You use the data that you get for Thinkorswim to run NinjaTrader, so you're really not paying for anything extra. And the only difference is, instead of looking at Thinkorswim data or Thinkorswim charts, you'll be looking at NinjaTrader to give you your PET D and strategy number 4. Very simple. We have a number of traders that do this. Plus, we have a great tech support team that helps you set this all up. So don't worry if you think, well, this is too complicated for me. We can have people help you set this up in a matter of hours. Okay. Let's see. Hello. Hi, Emmanuel. Let's see. Are the 50 and PET D similar as for seeing the trend? No. The 50 period simple moving average is once again for the overall trend, and it's a longer way of looking at things. It's more of an overall view of what the market is. The PET D is more defined. It gives you a real nice defined look of what the market is doing. As we showed you in these examples, you can really see that, well, as early as today, you saw with that PET D when we had 3 consecutive bars in red, automatically telling us way before anything happened, this large sell-off happened today, that we're most likely going into a short-term downtrend. So as long as it's red, and we teach you different ways in which to trade it, where to place your stop, where to exit, it's a great, really refined tool where the 50 is an overall trend identifier. Okay. Glenn asks, how does the PET D compare with PSAR or parabolic stop reverse? I don't think it does at all. I don't think that basically they're not based on the same thing. And I tried to trade the stop and reverse with the parabolic stop and reverse when I was on the floor. That was the big thing then, and never had any consistency with it. Once again, it worked great on the trending markets, but once you went into this whipsaw, you really got killed. You gave everything back. So it was the ranging markets where you gave everything back. That's the difference with the PET D, where once you're in the ranging market, you're not going to have a consistency of red and green. It's going to go back and forth, so therefore you most likely will not have a setup. Now, sure, every once in a while you will, and you'll have a stop out, but it's far less than using a parabolic stop. So it's really designed to keep you in the trend, and then once we're out of that trend, you don't see this confluence of green or red. That's the beauty of it. Maurice says, what platforms? Once again, Maurice, we just went over this, but I'll say it again. This works with NinjaTrader, TradeStation, Metastock, and MT4. Okay. Robert asks, can you show the choppy Oracle chart again with the PET D? Unfortunately, Robert, this is a static PowerPoint presentation. I don't have my charts open because if they do, you'd hear all these bells and whistles going off, so I closed down my charting software. But trust me, you know, it's something where you would have been going back and forth, and you wouldn't have had any signals, or they would have you would have seen like support and resistance form, but you wouldn't have been involved in anything because it would have quickly switched over to now a different color. So it really helps a lot. That's the beauty of the PET D. Let's see, Lori is asking, can this be put on 2 computers? And as you see in the right-hand column, Lori, it says all PET D combo works with MT4, Metastock, TradeStation, Multichart, Sierra Charts, and NinjaTrader. Also, Thinkorswim users can use free NinjaTrader download to run the PET D. So I hope that answers your question. But yes, we give you the license for 2 machines as well. Okay. Let me go down a few more questions before we have to close here. We're getting close to the end. Let's see, Dan asking, are you going to add updates in the future with the PET D to make it more accurate? Hi, Dan. No, we're not. We really, you know, I've been using the same PET D, and we have actually 2. We have a slow and a fast, and we just give them to you for your discretion. Most people just like to stick with one, and that's all they do. One keeps you in the trend a little bit longer. One is better for intraday trading and will get you in and out a little bit quicker. But it's up to you, and that's what we give them for you to experiment. But I've been using these same 2 ones for the last 30 years, so it's never been changed, never updated, never reformatted. So I don't really see any reason why I would do it now. No. What is the definition of a short-term trend, from Roxanne? That's a good question. 5 days? Yeah, I mean, a short-term trend is now, you know, it's all relative, because you can be looking at a 5-minute bar, or you can be looking at a daily bar. A short-term trend is anywhere from 5 to 10 bars, or maybe even, I would say, 5 to 20. It depends on what time frame you're looking at. Okay, so in other words, a short-term trend doesn't mean it's only on intraday bars. You can have a short-term trend on a monthly bar. Okay, it just means it's for a limited time. It's not sustained, where you see some of these trends just going on for 50, 60, 70 bars. It continues to go lower and lower. Whereas you saw in that euro dollar example I showed, where we've been going down for months, that's not a short-term trend. I mean, we've been doing that for a while. Whereas today in the markets, even if you looked at that 2500 tick bar chart, that wouldn't be considered a short-term trend because it's all relative. We had a number of those bars. But on an average daily basis, you'll have a nice trend for anywhere from 5 to 20 bars and then go into another trend. Okay. Robert asks, were you going to show us some hypothetical results? No, because this is not a system. We do not teach or trade systems. The only way you can give hypothetical results is when you monitor something that's traded the exact same way each and every time. That's the way a system is. Therefore, you can come up with certain statistical reference and numbers. I do not believe or trade systems. I used to, and I used to even teach them. But I've found once again that they will work until they stop working, and then you really don't know where you stand with it. You don't know how long you're going to be in these drawdowns. You don't know if it's going to come back into favor or not. It's much better when you have a little bit a part of yourself in the process. So this is what we teach, only strategies. And the difference is a strategy is still rule-based, but it's only 75 to 80% rule-based with 20% allotted for your own discretion. Now when I say discretion, I don't mean that you just hope and pray. I hope that it goes up today, or I'm going to bet the world on that this works. That's not discretion. That's just hoping. What we mean by discretion is an insight you get from practice, from studying the material, from listening to the advanced tapes I have to help you put some more ways in which to increase your odds. And it's just by deciding how you want to trade it. You want to trade it conservatively today? Would you like to trade aggressively today? So you see there's different ways in which you can trade the same strategy every day, but you're still holding the same format, but maybe today you're using the advanced entry because you saw something that you wanted to use. In fact, here's a perfect example. I usually I was trading actually that same technique today, the support and resistance on the E-mini. But I didn't use that same entry because it was a fast market, so I started to use a different type of entry, okay, one that we teach in the course. So most days I don't use that entry, but because of the insight I got and how the market was, I traded it a little bit different today. Well, okay, I can't have hypothetical results if there are 1,000,001 ways to trade it. So that's why we are not a statistical company, and we stated in the opening we are an educational company. So we teach you the basics of all of our strategies, but we want you to apply your own process. We want you to become a part of the process, because that's, in my opinion, how you really become consistent. It's not by going to some trading room and doing whatever the guy says to do, or listening to somebody on TV and following his ideas. Once again, if that was so successful, why aren't more traders consistent? What really matters is when you are a part of the process. That's why we stated at the very beginning, we teach all of these things to our students, our members, and then we want you to run with it. We don't want you to come back and rely on our knowledge. We want you to go out and apply your own process. Okay, so nothing is back-tested or researched because there's just too many ways to implement it. Let me see here, just a few more questions. Dan asks, is a tick chart more recommended than a minute chart for intraday futures trading? Once again, it all depends on how you want to trade it. With a tick chart, you'll probably get a lot more. Signals, but at the same time, you may get more noise than you would see on a minute chart. So it all depends. Once again, we always say the best chart to use is the one where it makes you feel the most comfortable. I have people that swear by tick charts. They use it for every market. I have other people that wouldn't touch tick charts with a 10-foot pole. They say there's just too much noise. You'll get whipsawed. They only like to use minute bars or other types of, they only like to look at candlesticks. So it's all, this is where your discrepancy comes in. This is where we want you to be a part of the process. This is why we can't backtest and research anything, because there's just too many variables. Let's see. Rod is saying, I know no one who trades, so the 2-for-1 deal is useless to me. Well, it's not required that you need to know anyone to trade this 2-for-1 deal. We teach you everything. I don't understand why you would think you have to know anyone who trades. The 2-for-1 deal is there to help you to use this so that you don't have to pay that higher price that usually comes with these two things. So I don't understand why you would need to know anyone. Oh, Rod is saying, but you'll give, well, once again, Rod, any type of plan or any type of payment structure, talk to the trading consultants. I only deal with teaching my strategies and my techniques and with mentoring. I don't deal with any of the sales. That's something that goes right to Pro Trader Strategies. Let me see, a few more questions. Let's see. Is it possible to add eSignal as one of the platforms in the near future? And as you see here, where we're answering, says, Emmanuel, you may be able to use the eSignal data for free with one of our options. The best thing is probably to call our trading consultants, and they can set you up with that and show you how to put that together. It's a little bit too complicated to go into right here. Let me see. I think that pretty much covers it. In closing, I think once again, if Rod is asking, I see he's a couple of more questions. Rod, yeah, any questions that have to deal with price, talk to the trading consultants, and they can structure a plan for you so that you can, put together something that will meet your needs. If you don't have that much money, you can't come up with that. We totally understand. If you haven't been trading for a while or have been on a losing streak, we're here to help you. We want to put together something for you. But at the same time, you should never feel in any way that you need to have other traders to know. There's that. I don't understand why you would even care about that. There's no reason why. Most of our traders are beginners in some capacity, so there's a lot of them have been trading for as little as 2 weeks, and now they've met with some success. So don't worry if you know any traders or not, okay? In closing, I just want to say that this is a great combo we've had. We've had a number of success with this, with a lot of new members and people that from anywhere from hedge fund traders to people, like I stated, that have only been trading for a couple of weeks. And they're very happy. The majority of the people are really happy with it. We still have people that are questioning, that are having difficulty learning, but we're there with you. That's the beauty of what we do. We answer emails. It takes us a while because we have so many members now, but we get back to everyone. We try to answer your questions. We try to show you what we feel is the best way to get you on that road to consistency. So hopefully, this is more of a course with a mentoring rather than just we give it to you and then you try to figure out how you want to trade it. As I stated in the beginning, I struggled for years until my mentors told me to really simplify my trading, and that's when I started to become consistent. So as you can see how simple this is, we really want you to keep things as simple as possible. Don't worry if you're not sophisticated enough or you don't know any traders at all. This is extremely simple, and you'll be able to grasp it in a matter of days, okay? So if you want to take advantage of that, remember, you can take advantage of the payment plans that we have. Just simply contact the information you hear either in email, or you can just call us up directly, or once again watch the video link and decide. But remember, we would say take advantage of it really quickly because we may be moving on to something else within the upcoming weeks, okay? Thank you so much for attending today. I hope you got something out of this course, and I hope to see that you all become members of Specialist Trading. We'll see you next time. Bye-bye.